Hey there, followers. This is Martin Day Trades, and today it's Sunday. Hope everybody had a good week, had a good weekend. Hope you guys were preparing for this next week, weekend, because we have some pips to catch. So I'm gonna be going over my weekly market outlook for the Nasdaq NAS 100. Today is August 28th, 2022, and what we're gonna work on and focus on this week, our main goal is to respect the 0% days. Um, I know because 0% days for me personally still an internal struggle, not to say, okay, well, I lost this trade. I had 0%. I didn't lose this trade. I caught a trade, got stopped out break even, but because I'm break even, I feel like I should put on risk again for that same particular day when the rules state to just walk away. Just walk away until I get better. But to then wait and see for see if the trade will go to another area for to catch a trade. But those days should be limited because believe it or not, having 0% days is gonna make a trader more profitable in the long run. So with that being said, let's go on to the charts. So guys, this is Nasdaq NAS 100 most recent daily chart. I trade fractals, guys. I don't trade on one particular time frame. I look at each and every day. I start out from I well, let's go to the week and see what happens. Now we have this previous week that all this price action that happened. Um, have the weekly high up here, weekly low right here. Okay. What can we see from this chart is that we have some areas where price needs to come back eventually. We got this area. We have this area on a daily. This is the order block for the daily, but someone wanted to, just go down on a weekly time frame. There could be a reaction there. And then we have all these targets that we had, this swings, and then we saw that this swing high took out these highs right here, stop losses before the move down. Now I knew when all this bullish momentum was happening over the last couple of weeks, one, two, three, well, 1, 2, 3, 4. It's been a whole month bullish, and then we just got rid of essentially 62% of those gains of that price movement in Friday's retracement. So now we're gonna be looking to catch uh, I want to expect a move to go lower into this range down here because I did a Fibonacci retracement tool from this low to this high, and you can see that. Okay, so we see that from this point to this point, and honestly I think it might be from this point to this point. We can see now that there's an order block right here, the last down candle before the move up. It could be this one too, but I see this one. And on a weekly, this is still a weekly. There's this area where price needs to come down into. Um, and that's between almost the 70 and 60, between a little under the 62% and the 79%. I wouldn't try to take a trade until it gets to at least half that, so between the 70 and 79%. With that being said, let's look. And this is a higher time frame, so there's gonna need to be a strong reaction at the 79% level, which has a confluence of the 800 big figure level here for a move higher. So I'm just gonna put this down here, guys. That when price gets into this area, I'm gonna be looking to go long. Um, right now, I'm gonna be looking for pullbacks, retracements to go short to catch these pips, which equates to, as of right now, wherever price is to this area where I'm looking to go buy is 629 pips. So out of that move, we're going to be looking for a retracement to then go back down. And where can price retrace to, right? Now we have 3 weeks, there could be a pullback. So if we go down to the daily, we're doing our daily previous day high. We have our previous day high um, candle here, previous day low. And what we can see here is we have this whole area where I'm expecting price to come down into. for a reaction. Now I do see this move right here. We call this a breaker block. You know, we got this area where it ran through. And what I'm going to be looking for now is a retracement to go short. Now, where could price retrace to? Okay, now that's a good question. Um, you could use this Fibonacci retracement tool for, let's say it doesn't go any lower during Asian or London. Let's say it starts to range and then climb higher. You know, there's this 38% fib level here. There's this fair value gap up here. If I'm looking for a continuation, I may look to enter where this big figure level is, 1300, 1350 level right here. Um, there's this daily bearish order block right here. We got the 38% continuation level right here, a little higher. So I'm gonna be looking for the move down. I believe on a daily that this candle is gonna go bearish. So I'm gonna be waiting for it to come up here into this range to hit the sell button for it to come back down. How low will it go? It may come down to these levels right here. Target this. Um, be out of my position most of it right here. So let's say we have this short position. We're entering at the big figure level right there. 50 pip stop loss. Right there. Um, it may not even go that high. It may come up to this level right here. And we have the 50, that's 100 pips. Man, this is going to be a big move coming, guys. So right now I'm going to be looking for a pullback. I don't really know exactly where. I just drew a Fibonacci to see this retracement to go lower. Because I'm going to be a buyer in this range down here, guys. So short term I'm bearish, long, well, the short term of this week bearish, but by the end of the week I'm going to be looking for longs depending on if it ranges, comes back up, may want to then have its move to come back up, take these highs, come back up to 79% for the actual long, and then have its descent down. But let's go down to the 4-hour time frame. Okay, we see that there's this 4-hour right there. We actually have some fair value gaps. We have this candle, this candle, this candle. So from here to here is a fair value gap. Um, yeah, so there's some areas depending on where price and time the time is in the morning. I'm gonna be looking for something to be wherever price is. Then I'll be looking for areas where buyers are gonna come in for the to take the trade higher, or for sellers to come in to then short the you know the market. So what I can look at here is then go down to an hourly chart and just, you know, anticipate what we are going to be looking for. So this is my weekly market outlook, guys. See if I can't move this right there. This is my weekly market outlook, and I just want to show you guys that I'm going to be looking for a pullback. You know, this is 1 hour chart. You know, it could be a couple of days catching, you know, buys at this level, then for the short down. So maybe a day or two, depending, because then price could technically, what could happen here, guys, is we have London have its move up, and then what I'm gonna do is measure this Fibonacci tool wherever, like, you know, London may come up here, have its move. Let's say it comes up there, and then has its move Asian, you know, London comes up there, and then it has its retracement coming into the New York Open. And I'll be looking to go long right in this range right here for the buy. Come up into this range. We know there's an order block up here. We know that there's this big figure level 3000. So we could target the 3000 level, have a buy, 50 pips. Seems to be a good spot. And then right here, this is a 1 to 5.25 risk to reward. And then we can or even like up to this level 800, not even to the big figure level because of where it's at, it could come up right here to the 38%. There's this area right here where it broke through the last down candle before the move up. Let me see if I can actually, this is a breaker block now and somewhere in that area. Let me go to 4 hour daily, the last down candle. So yeah, there's one that's right here too, guys. So there's this area where price broke through and the daily. Okay, so what does that look like? Okay, that's gonna be up here. This consolidation, I drew it out. Okay, so so this right here is the daily. I don't have it daily, 1 hour, weekly. I don't have a daily bullish or bearish, so I'm just gonna put a 4 hour bearish order block just so I can kind of see that on the chart. Okay, so we could target this right here. It matches up to the 38% continuation level, and then we'll see what happens because they may want to come up here. Well, as soon as it starts getting back up into these ranges, I'm going to be looking to go short once more to then target this 79% retracement level. Eventually, we're at the 50% right now. We'll see what happens around there. But I'd see this area where it needs to target in this range. So this might be a good spot for it to target before it does its thing and comes up. It could come up right here, test these areas, or then to move lower, and then eventually have its descent to come up wherever it took these highs. It's gonna want to come test these highs or this area right here eventually. So I could put this, um, right there eventually. This is a good analysis of what could happen depending on these bigger higher time frame order blocks. um, but if market comes up here, comes down, starts to break out, well, guess what, it's bull season here, right? So we're just waiting to fill this area, um, to have this move down, have this move up, fill it, come back up, fill it, whatever it needs to happen. We just know that we're in a bearish market cycle now. We've been in a bearish market cycle. We've been having some bullish momentum at these lows, so hopefully we can catch some steam down here at 11,800. Hopefully 11,800 for then the move higher. So with that being said, guys, I'm gonna just let it's important to stick to the rules, guys. It's extremely important to stick to the rules. Let's not lose anything more than 1% in any given day, and let's not overtrade on those 0% days. So I have an area of where I'm going to be looking to enter to go long. Um, Depending on how this moves, if it keeps coming down, I may want to look to buy down at this range. Um, there's this order block right here. So depending on how this, but I'm gonna if that's the case, it's going to go short. I'm gonna be looking for a pullback above the 12 a.m. open at least to then go short, and then catch it down here, and then maybe catch the long, put in the order to then see what happens. But I'm not trying to give back too much, guys. We know we are better at just waiting to see how the market sets up to then take that trade. Um, but yeah, we'll see how London sets up, because if London starts to go bullish and then has its little sell off before New York, I'm gonna be looking for a London bullish continuation move to go higher. So with that being said, I'm gonna delete this. And we have our Asian session low, 12 a.m. open, Asian session high, previous day high, weekly low. We have the weekly high up here, previous day low. We know where our order blocks are. There's some fair value gaps for our chart. We see these fair value gaps right there. I'm gonna mark this one as a fair value gap, just so that I know what the boxes are. And this is a 4 hour um, bearish order block right there. Um, this one is actually a daily breaker block. Let me see what are the edit text. I'm just gonna write this one, the daily bearish breaker block, BB breaker block. So because it was bullish and then broke through it, it is now this order block. It is this bullish order block broke through it. I'm gonna be looking for it to at least kind of come up to this level. That's why I'm targeting it too. Plus it lines up with the 38% fib level. So yeah, that's where we are with that right there. I'm gonna move this one more this way. Move this way to keep things kind of even. Okay. So there we got our game plan, guys, this week. We have our game plan this week. We know our bigger time frame. This is a 4 hour chart where we want to enter. You know, if we're gonna be looking to go long, if price stays down in this range, we see what London has a little pump. We might want to wait for the retracement, time and price, because then if London has a pump, and then New York may want to push it higher to then go short at a certain, like maybe at the open or maybe a little after for the, a good swing trade, hold it down. Excuse me, for the short down. Um, this video is now 17 minutes in. I'm gonna go back to this thumbnail, and I really want to just explain to you guys the importance the importance of not over trading, not over leveraging. Everything needs to be to a plan. Every trade. So you get one trade idea a day if you're lucky, Most people aren't even able or capable to even participate in this um, form of online marketplace to actually make money. People will try it out, say, "Hey, I'll give it a try." Um, lose, give up, and they're a statistic for people who never learned how to trade. They say 95% of people who learn to trade um, quit, and they say out of the 5%, uh, early 95% quit immediately within a year. 4% will quit within 5 years, and then the last 1% are the ones that stuck it out long enough to actually consistently, long term, make profitable trades, losing trades, but be consistently profitable in the market long term, because keeping the losses to -1%, respecting the 0% days, and then making nothing more than minimum 2% on any given winning day trade. So I pray you guys are patient. Wait for those levels to be hit, that sniper area. Wait for the 79%. Wait for that 70%. Respect your 1%. Two lot 50 pips on a 100K account. That's 1%. Um, Respect it. So, um, remember, stay dedicated. Do the work. One day it's gonna be your turn to become a funded trader, and at that day you're gonna have to accept the hard work that you've been putting in. This is your career. You did it, and now this is where the real work starts. Right here, everything trading is just a way of learning how to just make money. Like, it gets easy, it gets boring after a while. So when when one starts to then have to actually do it on the days they don't really want to do it, that's where discipline comes in, because discipline is going to get any person on this planet further than watching motivational videos day in and day out. You know, I respect. That's how I started. I watch motivational videos to get into that mindset. But then at a certain point, it just action at the end of the day, action. Um, sick, in good health or bad health, and days where your family makes you upset, and to the days you and your family are doing good. You know, every day, no matter the circumstances, there needs to be a routine, a process, known setups, and knowing how to control thyself's revenge trading, FOMO, over trading, over leveraging. So, guys, like, comment, subscribe, tell your family and friends, send this video to people, share it, tell people that, hey, uh, there's this up and coming day trader who's on the cusp of getting his funded account, and he's posting his journey pre funded account so that people can see the work that it is required to actually getting the skill level, the skill set, the proficiency to then actually take a funding challenge and pass it. You guys are amazing. Don't give up. Don't ever give up, and stay stepping 1% a day. Stay productive.